Welcome. In this video today, what happens if we buy 1 million Zbcn? We will analyze it. Don't forget to subscribe, don't forget to like, and please watch to the end to understand. But first, let's analyze Zbcn. One of the most notable elements on the chart is that the long-standing downward trend appears to have finally come to an end. This descending trend had pressured the price downward as investors lost confidence in the market, leading to increased selling. During this period, even though the price approached certain resistance levels, it was consistently rejected and continued its downward structure by forming new lows. However, when analyzing the recent price movements, it is clearly observed that this descending trend line has now been broken. The end of the downtrend could be a strong signal that the market is beginning to overcome this selling pressure. This also suggests that investor interest may increase again and new buying may occur. Such descending trend breakouts are very important in technical analysis, as they often signal trend reversals. Especially if the price has broken this trend line with strong volume, it is considered a sign that buyers are returning to the market. If this breakout is supported not only visually but also by trading volume and momentum indicators, the likelihood of a price increase becomes even stronger. It is currently seen that after this breakout, the price has pulled back and is performing a retest of the previously acting resistance, now the broken descending trend line. This retest movement is completely natural and often observed after many successful breakouts. Markets typically retest broken trend lines or significant resistance support levels, and if support is found, a new upward momentum can begin. During the retest, the price touching this trend line again and holding strongly there indicates that buyers now accept this area as support. This holding can also help hesitant investors gain confidence and lead to larger buys. If this support level is maintained and the price reacts upward, it could signal the beginning of a new upward trend. It is quite common for investors to expect an upward movement following such structures. Especially when analyzing past breakout patterns of descending trends, similar formations have often yielded successful outcomes. On the other hand, if this retest move is successful, it's possible that the price could begin a journey toward previous peak levels. During this rise, intermediate resistance levels will be important, but since the trend has been broken, it's fair to say that overall market sentiment has turned positive. In technical analysis, such reversal structures usually play a significant role in the bigger picture, because once trend lines, often seen as psychological thresholds, are broken, more buy-side decisions tend to emerge. Such breakouts create the perception that the downtrend is over, and this belief can accelerate the upward momentum. In addition, long-term investors typically begin accumulating positions around areas where descending trend lines are broken. This group of investors wants to enter the market early, but also waits for a specific structure to be confirmed. When the current price structure is evaluated with this logic, it becomes evident that the previously pressured price is finally starting to recover. And with this breakout retest process, new buyers could be stepping in. Especially the increase in volume around these levels indicates that new participants are entering the market and that confidence in a potential upward move is growing. That's why such retest moves following a breakout should be watched very closely, as price often makes a sharp upward jump from these areas. However, even though the descending trend has been broken and a retest has occurred, this does not guarantee an upward movement. Technical analysis works with probabilities, and no pattern offers a 100% success rate. Therefore, it's extremely important for investors to maintain risk management and define stop-loss levels. Sometimes retests may fail, and the price can drop back below the broken trend line, creating a false breakout. Still, the current price behavior suggests that this breakout is quite solid and steady. Especially when supported by momentum indicators, this structure increases the likelihood of a continued upward movement. When all these technical indicators are brought together, the fact that the price has broken the descending trend and then made a healthy pullback to test this trend line strongly suggests that the market is preparing to build a new upward structure. At this stage, the most important thing to watch is how long the price can hold above this support and the strength of reactions coming from this level. If the price creates a new higher high after this retest, it confirms the beginning of a new uptrend. In technical analysis, high-low structures give very clear signals about the direction of the trend. A new higher high and higher low confirms a shift to an uptrend, and these types of structures provide both psychological and technical confidence to investors. In conclusion, the fact that the long declining price has finally broken its descending trend and is currently testing this breakout is a very positive development from a technical standpoint. The structure may offer new opportunities to investors and shows that the price has the potential to continue its upward movement in the coming days. However, investors must remain cautious, monitor the market closely, and take precautions against sudden price fluctuations. Even though the technical setup appears positive, macroeconomic developments, news flow, and investor psychology can instantly alter price behavior. Therefore, it is essential to evaluate analyses as a whole and consider both technical and fundamental analysis data as part of a sound strategy. But we can't rely on trend lines alone for analysis, so let's take a look at other metrics as well. Stay tuned.
I'm interrupting the video for a moment, friends, because BitTunix Exchange has a great campaign. Here's how it works. After registering on the exchange via the link in the description and completing KYC, if you deposit $100 for your first deposit, you will receive a $20 bonus. If you deposit $500, you will receive a $100 bonus, and if you deposit $1,000, you will receive a $200 bonus. I think this is an excellent opportunity for leverage trading. For more details, you can read the articles below. The link is in the description.
The Elliott wave theory is a well-established technical analysis method based on wave patterns that regularly repeat in financial markets. This theory argues that price movements actually represent psychological cycles and that these cycles follow certain rules. Within this framework, when we examine the current price structure, a notably striking third wave formation stands out. Typically, the third wave is the strongest and fastest rising phase of the market. According to Elliott, the first wave is generally a cautious move upward. The second wave corrects this rise, and the third wave is when investor confidence strengthens and market momentum builds. Therefore, the third wave is usually the longest and most intense upward movement. According to the formation we're analyzing, the price appears to have transitioned into the third wave after completing the correction of the second wave. During this third wave, certain targets can be determined using Fibonacci levels. The most commonly used Fibonacci extension levels range from 1.618 to 2.272, and these are frequently observed targets for the third wave. Specifically, the 2.272 Fibonacci level is considered a strong potential target in an aggressive third wave scenario. At this point, it appears technically feasible for the price to reach the 2.272 Fibonacci level. Our technical measurements were conducted by drawing Fibonacci extension levels based on the low and high points taken from the current price structure. As a result of these measurements, it was found that the 2.272 Fibonacci level corresponds to approximately $0.0017. This level stands out as a meaningful target based on past price movements, support and resistance areas, and overall market structure. However, reaching this level does not solely depend on technical indicators. Factors such as market psychology, news flow, macroeconomic data, and project fundamentals also influence this process. Since the third wave is generally the longest and most heavily traded wave, investors should be especially cautious during this phase. As the price rapidly rises, FOMO tends to increase, and many people try to join the rally. This raises trading volume and can lead to sharper price movements. However, the most important point to consider here is that the price must break through intermediate resistance levels to reach this target. Selling pressure from these levels could cause the third wave to end prematurely or lead to temporary corrections. Therefore, investors should ensure that the price is moving within a healthy structure throughout this process. In addition, rising volume is usually observed during third wave rallies. This provides further support to our analysis. Volume increases are a significant signal that buyers are strong in the market and that the price is likely to continue moving in this direction. If volume increases in parallel with the price, it indicates that the rally is healthy. On the other hand, if the price rises without volume support, it should be monitored closely, as the rally may not be sustainable. In this context, reaching the 0.0017 level is possible not only from a technical standpoint, but also if it aligns with investor psychology, volume structure, and overall market conditions. Of course, reaching this level is not guaranteed. Technical analysis works on probabilities and does not provide certainties. Therefore, it's important to always take positions in line with your own risk profile, set stop-loss levels, and act based on strategy rather than emotion. Taking positions without risk management can lead to significant losses. Even during strong rallies like the third wave, there is always the possibility of the price reversing suddenly due to unexpected news. Another important point to remember is that Fibonacci levels function not only as target indicators, but also as psychological resistance zones. Since many investors act based on these levels, profit-taking may begin when the price reaches, for example, the 2.272 level. This can cause the price to slow down or pull back as it approaches that level. Therefore, it's wise to be cautious and consider realizing profits when these levels are near. Elliott waves are not just a tool for price prediction. They also help us understand which psychological phase the market is currently in. The third wave that appears to be forming now may signal a period in which investors are becoming more optimistic, the market is recovering, and confidence in the project is starting to increase. For this reason, investors should closely monitor this period and follow developments related to the project in addition to technical analysis. As interest in the project grows, the third wave could become even stronger. In conclusion, based on the current technical structure, it appears that the price is continuing within the third wave and may reach the Fibonacci 2.272 level. According to our analysis, this level corresponds to approximately $0.0017. However, for the price to reach this level, supportive market conditions, increasing buying volume, and sustained investor interest are necessary. Technical analysis presents probabilities, not certainties. Therefore, it's essential to remain cautious in such analyses, take positions that match your own risk tolerance, and make rational, planned decisions rather than emotional ones. No matter how strong the technical signals may be, maintaining a cautious approach is key to long-term success.
As of today, if we decide to purchase 1 million Zbcn tokens from the market, this transaction would require approximately $4,300. This amount may, of course, vary depending on the market price, but based on the current average price range, this is roughly the capital needed for a 1 million token purchase. Naturally, this figure may be considered small or large depending on the investor's capital and risk appetite. However, it can be assumed that someone making an investment of this scale believes in the project's future potential, follows technical analysis, and is convinced by a bullish scenario supported by fundamental data. The investor may be buying this amount of tokens not only with short-term profit expectations, but also with hope regarding the project's potential performance in the medium to long term. According to assessments made on the technical analysis front, the target level of $0.0017 for Zbcn suggests a strong possibility for this investment to significantly increase in value. If this target level is reached, the total market value of 1 million Zbcn tokens would be approximately $17,000. This scenario represents a value increase of around 395 to 400%, which is an extremely attractive return rate for an investor. However, it's important to note a critical point here. Cryptocurrency markets are highly volatile and unpredictable. Therefore, when making investments, it is essential not only to focus on potential profits, but also to thoroughly assess possible risks. Especially in low market cap altcoins like this, sudden price movements can lead investors to either substantial gains or significant losses in a very short time. In this context, both technical and fundamental analyses must be conducted carefully before investing. Assuming Zbcn is currently trading at around $0.00043, the total amount needed to purchase 1 million tokens would be approximately $4,300. If the price reaches the technical target level of $0.0017, this investment would be worth around $17,000. This implies a return of roughly 4 times the initial capital. However, investors should remember that several factors must align for such an increase to occur. First, reaching this level requires not only technical indicators, but also the support of various fundamental elements, such as market psychology, overall market trends, news flow, investor interest, and the activity of the project team. For Zbcn to realistically reach the $0.0017 level, it must first break through certain resistance levels with strong volume, investor confidence must increase, and the project team must continue to share updates to keep the community engaged. Additionally, the time factor plays a significant role in reaching this level. It may not be possible to hit the target in the short term. Sometimes the price may enter corrections, move sideways for extended periods, or fall well short of expectations due to waning investor interest. In such cases, it is important to be patient, avoid emotional decisions, and continue with a disciplined investment strategy. Indeed, it should be considered that reaching this target level may not happen in a day or a week, but rather over a period of months. When evaluating such potential targets, investors should not only focus on profit margins, but also apply effective risk management strategies. For example, instead of allocating all their capital to a single project, investors who diversify across different asset classes and projects are in a much better position to offset potential losses. This kind of approach not only increases the potential for gain, but also minimizes associated risks. Furthermore, the investor must understand that this price target is based on technical analysis and is not guaranteed.
While technical analysis provides forecasts based on historical data, due to the dynamic nature of markets, these projections may not always materialize exactly as expected. Therefore, before making any investment decision, you should conduct your own research and, if necessary, seek guidance from financial advisors. Ultimately, the responsibility for investment decisions rests with the investor. In this context, aiming for a potential return of $17,000 from a $4,300 investment may seem attractive, but one must not forget the challenges, uncertainties, and risks involved in reaching that target. Many factors, such as the project team's activity, community engagement, investor confidence, liquidity conditions, and overall market sentiment, can influence this process. However, when the right position is taken at the right time and the markets provide favorable conditions, such projects can indeed offer investors highly satisfying returns. In conclusion, making an investment of approximately $4,300 to purchase 1 million ZBCN tokens carries the potential for a significant return of $17,000 if the target price of $0.0017 is reached. While this represents a high potential gain for an investor, it must be weighed alongside the high risks involved in reaching that target. Investors should carefully analyze both their expectations and their risk tolerance before making such strategic moves. It is important to remember that success in the cryptocurrency markets is not only about knowing when to buy, but also about knowing when to sell.
Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments. Analyze the risks correctly and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.